All right, all right, all right. Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing, amazing weekend, as we're going to do what we do each and every day, identifying potential breakout trades and reversals from an educational perspective. We're doing a little bit of a test of a new live streaming software, and there's really not a great way to do a test without just going live and seeing if this works out well. So if you are watching me live on YouTube or on Facebook or on LinkedIn or wherever you happen to catch me, do me a favor, leave some comments down below so that I know that where you're watching me and hearing me from, as we are getting rolling today like we do each and every day. And hopefully this will all turn out okay, but we never know. So we're just going to give it a run, and we're going to see what happens. All right. So if you are new to the channel, we look at the markets every single day, and every day we identify potential breakouts and reversal trades from an educational perspective, looking for the best opportunities in those market conditions, and that's what we're going to find for today. So unfortunately, I cannot seem to catch everybody's comments. So if you have comments on today's video, I will do my best to read them. If you want to talk to me, I think the easiest way, because I can see it right away, is just to hit me up on the Traders Army text line, and I'll be able to get your comments on the Traders Army text line. So we'll go ahead and get that started. All right, so let's go ahead and get started and go through the markets today. So looking today at our markets overall, when I'm taking a look at the S&P, we are up 30 points this morning, as we had the news from the vaccine approval by the FDA, and we can see that the markets are continuing to run up a bit higher here. And as the markets have run up a bit higher, we talked last night in our live trade room about the opportunity for a gap and go. Now, the gap and go scenario that we're seeing here did indeed come to fruition just a little bit ago, as we came up above our entry point and now have continued the run. Now, when we talk about a gap and go, our rules on a gap and go is, first of all, it has to gap outside of the prior day's range, which we have done, and it has to gap outside the prior day's range, and it has to gap in the direction of the predominant trend. Now, the predominant trend is questionable as far as whether it's up or down. If you use the zigzag indicator like we do oftentimes to look at those swing lows and swing highs, then you will see that we have not put in a lower swing low or a lower swing high as of yet. So we've been known to use the zigzag indicator on a couple of occasions to find lower swing lows, lower swing highs. Unfortunately, we haven't put those in. So technically, we're still in an uptrend, but I would not hold it against somebody, because we don't rely on indicators. We just use them as confirmation tools to say, no, those are lower swing lows and lower swing highs in there. So I'm not sure that it's going to go down. Well, so I can see why you wouldn't have taken the gap and go in that instance if you didn't want to go in the direction of that predominant trend. So now when I look at it, I see that we have a better chance for price to continue to trade higher through here, because we essentially have clean air. Now, I think that right here above 3,700 should probably be your first target. That would be probably the first stalling point, the first target, and we're going to see where it moves from this point. If you still like it, but you don't want to take the breakout and you want to buy on the pullback, well, if I look at this on a 15-minute chart, do I have any super clean pullback areas? Probably not, right? I probably don't have any super clean pullback areas, and the pullback areas there are just they're not ones that I'm going to want to lean on for a pullback opportunity. I would say that we normally on these gap and goes will move our stop at about a 2-to-1 rule that the S&P is, and we've just come above. Now remember, our gap and go still includes our 6 candle rule, so we've come above, but really not gone really anywhere from that. And so if you're looking for a better area of demand on a pullback, the NASDAQ actually does give us a little picture of potential demand on a pullback on this 15-minute chart. So that's where that level would be. That little area of pullback on a 15-minute chart seems to be the one that makes the most sense. Okay. Next level that I would take a look at is Russell. So in our Russell 2000, interestingly in the Russell versus the other markets, let me pull up the hourly chart here. We certainly still had the gap and go, but the gap and go also included a traditional breakout trade because we had a little bit of basing. So that's one touch, two touch. On the gap up was our third touch of the level. And then we were basing in front of the level. Well, we got a breakout move of that zone. And so that one's actually given us a decent run since open. I would think on this one, for those of you that took the Russell trade, and if you're still in it, great. I think it's okay to take your stop and move it up below this pivot. I think it's okay to take your stop, move it up below this pivot, and lock in some profit. I like this pivot a lot. Even if you didn't get long on this trade, you could even move your stop up, or you could look for a retest of this pivot area for another opportunity. But I would take your stop up, move it underneath this pivot, minimize your losses. You could even move it to break even, frankly, to lock in a free trade. We've had such good movement off of that position. So I think those are two very, very good entries that we've seen price move from that area. And then certainly the last but not least is the Dow Jones. The Dow Jones also a bit of more of a breakout style trade on the potential gap and go. We poked above there twice, telling you, okay, 1, 2, 3, 4, 5. We're actually now at our sixth candle. And so if you took the Dow Jones, you actually poked above there, giving you an entry, and you're now at your sixth candle and haven't really done a whole lot. So maybe move your stop to break even just to protect yourself. So I think we're seeing some decent movement up out of this level, not amazing movement out of the level. And it would be a heck of a bullish day for price to go another 200, 150 points up, but we certainly have that in us. We've seen the market do that on a number of occasions. It will be interesting to see what happens when the market opens, right? So my question would then be, what happens when the market opens? Are we going to continue this bullish movement, this bullish momentum, or are we going to slow down? See, one of the lessons I think that we can take into this is what happens in the Globex does not necessarily always translate into the markets once the S&P, the NASDAQ, the Dow, the Russell, once the actual equity markets open up, once the cash session begins, might we see a little bit of movement right there at the open? I think we could. I think we could see some volatility at the open today, and that volatility is going to be news-based volatility. And whenever we see news-based volatility like that, what we have to do is just be a little bit more cautious about entering positions at that time. I actually don't like to enter positions right at the open. I prefer to enter positions a bit after the open to allow time for the market to absorb some of that price movement. So hopefully that makes sense to everybody. Now let's go ahead and take a look at our commodity markets. So crude oil and gold and some of those other markets, I think will be the ones that we take a look at next. So when I look at crude oil and gold and a lot of those positions, starting with crude oil to me, when I open this thing up, the first thing that I notice is that our sideways price action is, the force is strong with this one. The force is strong with our sideways price action in this instance. And so since we've got such a strong sideways price action, we do still have a level of demand below us. If I go to the 4-hour chart, what do I see there on the 4-hour chart? Well, what I see on the 4-hour chart is I see momentum that is significantly slowing down. I see a lot of slowing momentum on this position. And whenever I see that momentum that's slowing, I always want to consider the potential for a rollover. So if I just draw call it a trend line, we had an uptrend line here. Now we've broken below there on this sideways action, and I don't have to pull up the indicator in order for us to see that we're putting in higher swing highs in price, roughly or slightly lower swing highs in our momentum indicator. Now those lower swing highs in our momentum indicator mean that I need to just be cautious of this position and just understand that there's a chance that we're gonna fall down from that level. And if we fall down from that level, well, where do we stop? Well, if I think about where we stop today and where price can go down to, I've got to look for my next quality area of demand below where we see these areas. Let me remove all these studies to clear this up a bit. I would say that you've got a level down here at about 45.88. But if we break below our 4-hour, if we start to really show weakness, we'd have to get below here before we show any true weakness. And we're just not there yet. So I'm going to maintain my bullish stance and my bullish bias, and I'm going to want to buy on a pullback to quality demand. I'm also still okay getting long on a breakout above this region, but I'm a lot less comfortable in my long setups today than I was last week, right? Because last week we had a bit more strength in our positions than we do right now. The next market for us to take a look at and to talk about is gold. Now, when I take a look at gold from this perspective, and I'm identifying gold, my mind is going to go first to this head and shoulders pattern. Now, real quick note about price patterns. When I talk about price patterns, head and shoulders, double tops, double bottoms, ascending triangles, descending triangles, bull flags, bull pennants, bear pennants, all the different chart patterns that are out there. I believe that there is some validity to chart patterns. However, understand this about chart patterns. When we talk about chart patterns, a chart pattern is nothing more than price action fulfilling its swing highs and swing lows and trend changing direction. So as we look at this head and shoulders pattern, the thing I think we want to pay attention to is that how does trend change direction? Well, if I look at a 4-hour chart, and looking here at this particular 4-hour chart, we see that we have swing high, swing low, swing high, swing low, swing high, swing low. We have higher swing highs and higher swing lows. Matter of fact, if I throw my zigzag indicator on there, it's going to be pretty easy to see. Swing high, swing low, swing high, swing low, swing high, swing low. Now we're putting in lower swing highs and lower swing lows. Well, that's the definition of trend changing. So the reason that these work, it's not because the pattern itself is magical, although there's a lot of strength to the pattern itself, because if enough people see it and act on it, then their price can move. But it's because our trend has changed direction. Now, if I look at this on a 1-hour chart, we touched below there without truly getting us basing. Doesn't mean that I'm still not okay getting short now that we're getting the better basing, right? We're actually getting better basing now than we did on this little touch. So I'm still okay on a breakdown below that level. I think that level still holds a lot of validity. If we do rally up, you do have a little area here where we could see a retest as a potential short opportunity. Okay. Taking a look at natural gas. So nat gas, last night we had talked about the gap and go positions. So if you guys caught the gap and go position last night, 1, 2, 3, 4, 5, we're 6 candles into it right now. I think it's a good opportunity to take your stop and move it to break even, because we are definitely 6 candles into it and we haven't done a whole lot of anything. But take your stop, move it to break even. The trade can still work out very effectively for a nice profit, but I'd rather just remove the possibility of a loss in those trades, right? If I take away the potential for the loss, it's going to make that trade a significantly better area, significantly better opportunity. Next would be our copper trade. So on our copper level, we've got a little bit of basing in here that we talked about for potential breakout above that zone, and it hasn't quite hit as of yet. So let me go ahead and share this grid on our trade update page. So if you guys want to get a copy of those levels, make sure you go to the Traders Army page and go to the trade updates, and you'll see that the trade updates are in there. I think I forgot to share the equities trade page. All right. So next, let's take a look at our agricultural futures. As we had looked at those a little bit last night, we saw that there was a couple of movements in there. Now, one of the things to consider, we're now looking at, so far today, we've looked at 8 different futures markets. And one of the things that I always comment on, yes, we've looked at 8 different futures markets. Does it mean that I necessarily am going to trade every single market? No. We're about to look at 4 more, and then if we have enough time, we'll look at the last 8, which is our currency pairs. That's 20 markets a day. Do we think we should be trading 20 markets a day? Heck no. Matter of fact, you might want to trade 4 or 2 or 6, but 20 is too many. So just because I review 20 doesn't mean that we should be looking at trades every day on all 20. I just want to stress that. I think there's a lot of people on here, this may be the first time you've watched, and you got to understand that just because we're looking at 20 markets doesn't mean we trade all 20. As a matter of fact, these last 12 I'm going to go through pretty quickly. So starting with our commodity charts here. And on our commodity charts, the one that we are going to utilize first is soy. Now, soy, if we look at it, the thing that we should first notice is that it's pretty range bound, right? This position is a pretty range bound trade that I don't see a lot of opportunity inside of the range. Now, last night, somebody had asked me about this area here, and I was not a huge fan of it because it's a retest of this level. If you decided to give this a go anyway and say, I think I want to try that short, well, now we're basing in front of the level, which we all know is called the kiss of death, right? Kiss of death is going to be basing before the level. So what I'm going to want to do is I'm going to want to look for the level that is going to be the best opportunity a bit higher than that, which I think is this supply zone up in here. Looking at corn, we looked at our corn trade last night, this little rally-based rally right at the open of yesterday. We came back and came really close to it without getting in. So because it's a Globex level, I'm actually just going to remove it. I'm not going to even leave that trade as an opportunity. Breakout trade is still available here above 429, but I'm not going to lean on that one quite as of yet. I don't think that that's going to be the best trade that we're gonna see and that we're gonna want to jump into. Next is wheat. So looking at wheat has a good move up, and we see that we have a very strong upward trend. We've pulled back really hard in the overnight. I mean hard. We pulled back very hard on our last 4-hour chart. Pulled to a 1 hour actually. And so is this pullback enough for me to get short on a retest? Well, with the strength of the 4-hour trend, it's really tough to do. But that 4-hour trend did come back into this area of supply. So if you want to give this a short opportunity, I think that it actually may set up for a little short below here, provided that I get some basing, as our 4-hour trend maybe is slowing down a bit. And then last would be bean oil, and bean oil has come into the supply area, which was a confirmation. And we've started to get a little move away, but not a huge one. On our 4-hour trend, we're in a pretty good uptrend. This might be just a little bit of a pullback, and so I'm going to remove this. If you didn't get in, I don't know that I would take it a second time through. But I do like this pivot right here as our retest zone. All right, so let me share this grid as well so that that's out there. All right. So next, let's go ahead and talk about currencies. So when I switch over now and we talk about currencies and what we're looking for when it comes to a currency market, what I'm going to do is talk specifically about, what's the dollar doing, right? What is the dollar doing? And a lot of this is going to be based upon what happens with a stimulus package, where the markets go from this point. And so when we look at currencies, we look at currencies in conjunction with bonds. Now, I'm looking at currency futures. A lot of you out there are just straight up currency traders. You trade the euro yen, the dollar, the dollar Swiss, the pound yen, whatever it is you trade. We're looking at currency futures here today, for those of you that are new, because everything we look at is traded against the dollar. So I want to start my analysis by really looking at the bond markets. And the bond markets are going to be an important part, because if we see the bond market showing a tremendous amount of strength, right, then that might tell us something. Well, right now, what are we seeing? We're seeing the bond market showing us a fair amount of weakness. Matter of fact, we had a gap down last night. And For those of you that tried the gap and go, we didn't even talk about the ZN as a gap and go potential, but it's definitely showing a bit of weakness. 4-hour charts are fairly sideways. Was going up, was a strong up move, but now that we've had this price shock, I think it's actually coming back down. And so I don't want to overreact to the more current price movements, but I do want to be very considerate of this area of supply, which I think is a strong level where we could see price reverse. On the 30-year, if I look at the 30-year Treasury bond, so in the 30-year Treasury bond, I would look to this wick over wick area up above here. This is actually a very recent creation. Let's look to see if that one actually gives me a reversal point. Now, moving on to our currencies. In the euro, we looked at the euro as a potential for a breakout. And the euro's breakout potential was right above this this area, and we have actually gotten that. So it does, we have basing right there immediately before the level. This breakout does tick all the boxes, if you will. The absolute tightest your stop could be is underneath this wick. So that's the absolute tightest that your stop can be in this position, because this would be our closest pivot. If we were looking at a smaller time frame, that'll show up much more clearly as a pivot. So stop down below here. And our target in this instance would be our opposing level of supply. Now, in order to really see that, I got to go back way more in time. Does it show up 180 days? No. Let's see if it shows up 360 days. No. Let's go back 3 years. All right. So when I go way back, and I'm going back all the way to April 25th of 2018 is our area of supply that we're looking at to make our next stopping point. Now, by the way, are there still trades left from April 25th of 2018? No, I don't think so. But I think that if enough people look at that same level, now, by the way, this area here is an old area of support. Old support becomes new resistance right at an area of supply. So I think it's very plausible that we could see price move down from here. And so I think that that would be where your first target would be. That's your main target off of this breakout trade, which is a pretty nice reward to risk. Next, the Canadian dollar. So looking at our Canadian dollar trade. Now, remember, our rules on breakout are pretty set. If you don't have the proper amount of basing, then it's not going to be what we would consider a true breakout. If you don't have the proper amount of basing, it's not going to be what we would consider a true breakout, so I wouldn't necessarily lean on it at that point. Same thing with this Canadian dollar area here. Right now, that would not be a breakout if we just pop right through it, because I wouldn't have the basing necessary in order to make it a breakout trade. But I can look at this area down below here for a potential reversal, and let me tighten that zone up a bit. That's the tightest our zone could be. If you're a bit more aggressive, you could go all the way to the top of that wick. All right, so let me share this one. And then we've got a couple more markets to review, and then we will turn it over for the day. I'm just typing on I'm sharing the screen, the grid on the other screen. Okay, let's move over to our last markets for the day. The New Zealand dollar, the Great British Pound, Japanese yen, and the Aussie. So in the New Zealand dollar first, we had looked at this as a potential breakout level. And on the 1-hour chart, we did not get a true basing in front of the level, but at the level we are now currently basing. Well, that's not quite the same and not as highly probable. And so if you didn't get in, I don't know that I would get in at the moment. You might just go candle to candle if you didn't get in and you still want to try that for price to move higher. It's just a little bit of a stall, and I could see us moving higher from here. It's a little bit of a bull pennant pattern, frankly, right? As we have the bull up, and then it's pinching here a bit at the end. So a little bit of a bull pennant pattern that I think is still a strong move up. If not, look for the retest back to this area in here. Next would be the Great British Pound. So looking at the Great British Pound, we had looked at a level of supply. Now that level of supply that we had looked at here is this drop, base drop. And we gapped up yesterday, and we gapped up and really didn't give us a good gap and go setup because we didn't, I mean, we got technically outside of Friday's price action, but was our trend truly an upward trend? Not really. And so I didn't really look like in this one for a true gap and go setup. Now, if you took it on a gap and go trade, you're actually feeling really good about yourself as prices continued to move. I did not. Matter of fact, I actually had a supply level set up. I didn't have this supply level as an executable trade because I was, in bed when price came there. But now that supply level actually, to me, sets up for a potential reversal because it becomes a flip level on this 15-minute chart right there. So a broken supply that I didn't get into because I was in bed can set up for a quality demand that might give me a decent entry. Japanese yen has come into our confirmation supply. We got a bit of basing here before the level. So basing before the level makes it a lot weaker. It's the kiss of death to get basing in front of a level. And so if you took it, be very judicious with your stop. I will tell you, if you didn't take it, don't take it. There's a stop. I mean, we are basing immediately before the level, which is the kiss of death. And now we're at the very top of this range. So even if we do pull back a bit from here, I would look to this area right there where there's a very small unbalanced wick over wick at 96,327 by 96,301, where I think you could see a better reversal trade. Stop, obviously, in this case, below the pivot, though, if you're looking at that on the reversal. And then the Australian dollar, we had talked about a potential for a breakout above this line. We are getting a decent little move above that area from what we talked about last night. If you didn't take it and you still want to, I think it's still okay to do so. Your stop would just have to be below this right here. So stop below below this wick right in that level. All right, and let me share this grid as well, so that you all have, oops, I want to save grid, I want to share grid. All right, so now you guys should have all of them on the trade feed page of the website. All right, so last but certainly not least, one of the things I want to talk about for you, those of you guys, we're heading into the holiday season. And, people talk about the Santa Claus rally. One of the things I want to remind you of, you don't have to trade, right? There's nothing in the world of trading that says that you have to trade every day. And don't feel like, oh, I got to find something. I got to look for something. Today I got to trade. You don't have to. There is nothing in there that tells you you have to step up and place that particular trade. And so when I'm looking at the markets, I want to find the best probability, higher probability, low risk, and then I want to take leverage, right? Probability, risk, and leverage. And when I do those three things, and I understand those three things, I'm going to get significantly better in my trades. So I want to stress that. That's an important thing to consider. The last thing I want to leave you with is, for those of you guys that are interested, and I know a lot of you are already enrolled, Traders Army members, you guys already know about this. Those of you guys that are fairly new, if you're interested, we're doing a tactical reinforcements class. Actually, the next two, we're doing it Tuesday evening and Thursday evening. It's a 2-session class, so 4 hours. It's a 4-hour class, 2 hours each session. And what we're going to talk about is, how do I use tools and indicators as trade reinforcements and probability enhancers. So if we still have, because it's an online class, we've got a couple more seats available. So if you're interested in this class, it's got a fairly low tuition, $299. Go to tradersarmy.com/tactical-reinforcements in order to enroll. So we'd love to have you join us. If you're interested, let us know. It's our first time offering this class, so we're actually pretty fired up about it. So looking forward to seeing all of you that are interested in that one. So that's all I have for today. I appreciate you guys paying attention and joining us today. And like I said, this was a brand new attempt on our live stream. So If you've got comments, please leave them down below. I'd love to read and understand what your comments are. This is our first time, I think, live streaming to Facebook at the same time as we're live streaming out to YouTube. And I think we're also live streaming to LinkedIn as well. So thanks for joining me. I hope you